The government's been trying to get a hold on rising debt owed by households. Traditional lenders have tightened their credit screening, but data from January show those with not so good credit and lower incomes have been turning to so-called savings banks, which in other countries would be considered a non-traditional lender. Their outstanding loans to households in January reached a record high. Hyo-sun has this report.
People with bad credit and low income are increasingly turning to savings banks to borrow money, despite relatively high interest rates. In Korea, savings banks refer to consumer finance companies that are not banks in the traditional sense. According to data from the Bank of Korea, as of the end of January, outstanding loans to households from these savings banks totaled 19.2 trillion Korean won, or approximately $16.6 billion US. Compared to December, that's a jump of 5% and double the rate of increase. It's also the largest amount of such loans outstanding since October 2003, when the central bank started compiling related data. The increased borrowing from savings banks reflects how incomes are rising more slowly and traditional lenders screening borrowers more strictly. Analysts say the trend could pose a risk to the national economy because people with poor credit and low incomes account for the majority of the outstanding loans from savings banks, whose interest rates are more than 4.5 times those of traditional banks. Hyo-sun, Arirang News.